What's up, everybody? Michael and Coco here to do some technical analysis on the financial markets. Today, we're going to be looking at the SPX, the SP 500 Index, the NASDAQ 100. We're going to take a look quickly at the dollar, gold, and silver, and then a couple other indicators as well. Going to walk through what took place today, about the community post that I posted just the other day, maybe some of the stuff that I posted on Instagram stories as well. Without further ado, let's go ahead and get into today's episode. All right, welcome back. The S&P 500 had a strong start to the week, good in the overnight futures market, and what we saw today was up 1.27%. That's up $42 and some change, and we're going to be zooming in here, but I'm on the weekly time frame. I just wanted to point out that we kind of recaptured the 5-period moving average, 5-period exponential moving average. We closed above it. So that is a good thing for the bulls. We're going to be covering some bullish aspects and some bearish aspects today. We have a week full of stuff taking place. So we have on Wednesday, we have the VIX Futures expiring, which we'll get into the VIX chart here soon. We have quad witching on Friday. So just a lot of different things taking place. And then you're going to layer that on top of the FOMC meeting as well. And I feel like I'm also forgetting something here, but that's what's in my head at the moment. So we have just a lot of things taking place this week. Probably going to be seeing a lot of more uptick in volatility, at least I would imagine so. Let's go ahead and hop into the daily time frame for the S&P 500. All right, so here is the daily time frame for the S&P 500, and there's a couple different things that we've been tracing. I took off the Fibonacci retracement level and the Bollinger Bands because they will come back in later videos. But when I want to clean up the chart and point out a few other things here. So first things first is we were sitting at this area of support, this trend line right here, this dashed green line. We bounced from that area, but there's a couple other things that kind of were around that area of support. So there's a lot of support within that area we were talking about. First thing we mentioned was the hammer candle that formed on the last trading day last week, and that was right around the 50-period moving average. Hammer candle right at support. What I want to show you here is first we recaptured the 5 EMA, which is a strong thing for the bulls. Once we get into the 30-minute time frame, I'll show you the falling wedge with the positive divergence that were taking place and kind of my target idea for what's going to happen there. But let me go ahead and draw in just a couple more aspects of this so you can get an idea of why this area is holding up as a strong support and what you can expect if it breaks down from here. All right, so what I just did was I added in one additional trend line of support. And now, I'm having all these lines everywhere, so it can get kind of confusing, and I'll be cleaning up the chart in the near future here. But I just wanted to show you here when we hit the March bottom, we came up and we ran into this level up here, and then we got rejected again. So that created a lot of confusion. Main pivot point area, 2650. And when we acted as resistance, when we broke above it, if you follow that trend line, it's been acting as a support since basically April. So we had April touch here, here, and then we had here, almost right there, right here, and now we're coming into this area as well. So not only do we map out this level of support in the 50 period, there's another area of support that this is kind of all running into at this particular pullback here just recently. So a lot of momentum to the downside, but there's a lot of support holding this up. So really what I'm thinking here is if we start getting below 3330, that would be more for a cause of concern down to the lower area. I would say 3,000 up into this 3250 range up in there. That would make sense to me if we start closing below that. We're not there yet. And on previous videos, we kind of discussed this looks like we can see a potential bounce point from here to make a lower high and then maybe roll over more in October. And we'll pull up the NYMO here too to show you kind of the breadth of the market. We haven't had a positive breadth for the entire month so far. So it's very likely if we do get a breadth up, so if we get a move above zero, what we could potentially see during that time is a spike higher here as well. And then could be a very good opportunity to potentially go short. So we'll go into that here shortly. But let me bring up the 30-minute time frame. I made some adjustments to that chart. And as for a reminder, if you want to see these charts on your own personal computer, personal laptop, personal cell phone, the links to all these charts are in the description below. All right, so here is the S&P 500 30-minute chart. Now I made some updates to this. Hi, you want to get down? My sidekick wants to get down. Half the viewers just left. but half the viewers are staying. So what we got going on here, and I posted this picture. I didn't call this out on the last market brief, but shortly thereafter I posted on the community tab because I wanted to show, you know, something that was more bullish. A lot of people saying that I was like having a bad day or something. I wasn't. Maybe I was. Maybe you guys just know me better than myself. It's a very big possibility there. But we had this trend line going down. Right here is this falling wedge. And what we saw today was we saw a nice gap up and a confirmed breakout of the falling wedge. And, you know, midway through the day, I was posting on Instagram a little setup that I saw, and I got stopped out very quickly. It was about a $16 loss. And my kind of guess here was that we were going to see a continuation to the upside. And really what we started seeing was this just consolidating on the 30-minute time frame, slowly down, but staying above this upper trend line. So the falling wedge is still a confirmed breakout at this particular point in time. And then in the last 30 minutes of trading, this candle here was breaking out completely from this bull flag. So first off, we had this big pull right here the last couple of days of trading, and now we're seeing this flag pattern. So this right here is a bull flag, which is a bullish pattern, and then we have the breakout of the falling wedge, which is a bullish type pattern as well. And then you look at the divergences taking place. We had a positive divergence in the RSI and the MACD. What does that mean? Well, it basically means we have a low high here to a higher low there, and then we're seeing the price action go from a high to a lower high. So the price action is going down, but the RSI and the MACD are going up. That tells us, you know, this is a positive divergence. You tie that in with the other patterns. The ideals are looking in the bull's favor for this specific chart that we're looking at here. So what can potentially happen? Well, the reason why I wrote a target up here at 34.70 might go a little bit higher if, you know, if it does continue to push. But with everything that's taking place currently this week, and there's a lot of curveballs, so you need to be very nimble this week if you're trading. And the reason why I'm saying you got to be nimble is because, one, we don't know what the Fed's going to do. Two, we do know that sometimes when VIX option contracts expire, we see downwards pressure on the VIX, which we've kind of seen, and I'll pull up here shortly. And then we have the quad witching as well, a SOPX week. So just a whole realm of things taking place. But typically, that kind of stuff is bullish. Now, we don't know what the Federal Reserve is going to come out and say. In my personal opinion, I would imagine that they're going to come out and not just say bad news. However, there's just been like this back and forth about more stimulus. There's a lot of bullish things, like what I'm saying. But from a technical perspective, I'm just looking at the technicals here. What I see is this bull flag breakout of the falling wedge, and I'm thinking that we might be able to get a move to 34.70. And if we do get a move to 34.70, the reason I have it there is, one, that's kind of like the top of the falling wedge pattern right there, which we can see some resistance from 34.70 to 34.80. And just a quick little tip, I'm going to show you this little hack. The bull pull, so from the bottom of the pull to the top of the pull, on a breakout of a bull flag, you can typically see a breakout of the same distance. Now, that's not always a fact, but if I measure it from here to there, watch what happens. I can take that pull, and then I can move it from the breakout candle right over here. And as you can see, it tucks in perfectly to right around 34.70, which happens to coincide where the area of resistance is right here and the top of that falling wedge. So coincidence? I don't know. I mean, it typically works out like that in most cases. Doesn't mean that the price action is going to go there, but that is kind of where my eye is at for a target. So that's kind of the analysis from more of a bullish perspective. Let's go ahead and pull up the VIX chart really quick, because the VIX chart is very important right now too, and this is why I'm thinking like you got to be very nimble here, because we have, you know, a very bullish pattern in the VIX, which is not always, you know, bullish for the S&P 500. So here is the VIX chart, and we had these falling wedges, breakout, falling wedge, breakout. Our target was around 40 to 45, that kind of range, and we didn't quite reach there. We darn near almost, and then we had this gray box down here. That is a gap that I've been saying, like, I feel like it should be filled before we see another ramp up, which now I'm just kind of like, I'm not too sure. Maybe we get the push down this week, because sometimes it's what's going on right now is negative for the VIX, and we see these little crushes take place. But notice the pattern that's now forming again. This right here looks like another falling wedge. And falling wedges, we've been seeing breakouts, or you can call this a bull flag. But let's push in a little bit closer on the 30-minute time frame to kind of really get a good grasp as to what is happening here. Okay, so here is the VIX on the 30-minute time frame. When we punch in, you can really see what's taking place here. This is another, obviously, shorter term falling wedge, which we've seen the history of these falling wedges within the VIX. What I'm kind of looking for here, and why this is a cause for concern for more the bullish type of trades, is if we start to get a breakout, I would probably be a little bit hesitant to hold on to my long positions, because if we get a breakout of a falling wedge, we can really see this thing really pick up in volatility. However, there is some space for it to run lower. And as you can see, if you look back in the previous history of the chart, this kind of gap up right here is also a gap on the 30-minute time frame that has yet to get filled, and that goes as low as about 23. So we very well might see some more momentum push to the downside and then potentially break out after this week passes. Just keep an eye closely on this chart because it's important, and I'm going to once again have it linked in the description below. I'm going to make sure to just watch to see if you do see a breakout to the upside, because then, yeah, you might want to start taking some profits off the table on any long positions that you might have. And if we see a continuation to the downside, then I think that that's good for the bulls and the long position. So here is the NYMO, and we've been monitoring this because it gives us a good idea as far as the breadth of the market, what's taking place behind the curtain. And we've been at a negative breadth since mid-August. So this entire month we've been negative breadth. And you look at the S&P 500 up here, they have those dashed lines that we have already talked about and discussed. This bottom trend line of support is holding up as support. So if we do start seeing the VIX push lower, maybe we might potentially see the NYMO start moving up, which could very well make a good position entry for adding to a short position. And that might bring the S&P 500 up to that lower high, which we've kind of were discussing if we get a bounce from there. And then we've already discussed on the S&P 500 if we start seeing a break below 3,300, kind of where that next level of support is. Here's the CPC, which is smoothed over 10 days, and we're looking at this as an indicator for a sell signal. It crossed over the 0.8, letting us know that, hey, this is a sell signal, or, it doesn't mean necessarily a crash is going to take place, but it means that you need to start hedging or taking profits off the table. So that was notified. I think it might be, we got to see where it updates. This I don't think is updated right at this particular time. I think it takes a little bit longer to update, but we did cross above it. So monitor this one as well. This is a lagging indicator, as already previously mentioned. If you do look at the CPC without the smooth 10 average, you'll see a lot more jolting back and forth. And when it goes above 1, there's more of a bearish bias when it's above 1, and there's more of a bullish bias when it's below 1. Here's the US dollar, and this is just a very important chart as well that we got to always keep an eye on. And really, what do we got going on? Well, we don't have much action taking place other than the fact that we recently broke out of this down channel. And yes, it's still in bearish context, but we recently broke out of this, creating a higher low and then also a higher high relative to the previous little peak here. So that to me is bullish for one. In bearish context, we have the positive divergences, as you can see, the RSI and the MACD. And we have a lot of people that believe that the dollar is going to get crushed. But on the other hand, there's a lot of people that believe we're going to see a spike in the dollar. So what happens if the dollar keeps on continuing to rise? Well, we'll see pressure on other assets, and it can bleed into many different assets. In particular, gold and silver is one that we really keep a close correlation with. And that doesn't necessarily mean that gold and silver is going to come tumbling and crashing down. However, it could very well apply pressure to the current patterns that are taking place in gold and silver. And both of them right now, when we pull up the chart, you're going to see that they've been consolidating for quite some time. And a big spike in the dollar, maybe not even a big spike, could very well send those assets, those commodities, to a lower level. The level on the dollar that I am still waiting for confirmation up to break above would be 94. If we get a daily close above 94, I would be more convinced that this move has legs. The NASDAQ on the daily time frame here, we are still above the 50 period, but we didn't gain back control of the 5-period moving average, and we recently broke out of this lower trend line. If we regain control of the 5 EMA and we stay above the 50, this could very well just be a short-term little move right here and potentially head a little bit higher. But if we start closing below the 50 period moving average, and just start moving a little bit lower, then we're going to have to start mapping out other areas of support, which could be very well this 10,283 level for a buy the dip type moment. But when it comes to buying the dip, and depending on where we are as far as the date happens, if we get pulled back there, we got to be a little bit more careful, because we are moving into a month. When you look at a seasonality chart, October during the presidential elections, you see some pretty big moves to the downside. So you got to be positioned and ready for moves to the downside in October. Gold, nice day today, up $15, tested the upper portion of that trend line, still is consolidating, right? Still is within this pattern. We haven't had a breakout, we haven't had a breakdown. Keep an eye on the dollar. If we start seeing the dollar move up, this can very well apply the pressure. We have the 50 period, like I said on the previous brief, sloping up into this. So that's a good thing for the bulls. But on the other hand, I mean, I want to buy more, and I would like to buy more at a lower price. And if we see the spike in the dollar to bring the price of gold and silver down, I would like to buy more gold at around 18 to 18.15. So I'll have orders ready, set to go when we see that take place, if we see that take place. Silver still also within the consolidation pattern. Decent day today, up 50 cents, 1.85%. 200 period sloping up, the 50 period sloping up. 50 period on this chart is below this lower trend line. It does, I mean, if it holds and still keeps consolidating, yeah, the 50 period is going to be moving into this, in the next few weeks. But we'll see. We'll see what happens. Like I said, keep an eye on the dollar. This is just consolidating, not giving us much. But make sure that if we do start seeing a break above, it has to be a real breakout, not one of these false type breakouts. We need a daily close above it, a weekly close above it. We need to see some volume taking place. Here's Bitcoin on the daily, and check it out. We broke out of that bear flag, not to the downside, but to the upside. So this no longer is a bear flag. Once we broke above it, look at that. Look at the pressure to the upside. When support is broken, or when resistance is broken in this case, clearly there was a lot of data points suggesting that this was a level of resistance, okay? Once resistance is broken, it then becomes support. However, if there's a lot of resistance and a lot of data points, when it is broken, you typically see forceful action take place. And 359 points in Bitcoin, 3.5% move for the day. Maybe some people might say that's not that big of a move for Bitcoin, which is, I mean, looking back at the chart, I guess that's not that big of a move, but it is pretty of an aggressive move in the context of where we're looking from this bear flag breakout. So pretty decent. Now we're going to have to kind of just monitor where it could potentially go to. If we start seeing it rise up to 11.2, I would expect to see resistance at 11.2 now. Why 11.2? First off, that's right next to the 50 period moving average. The price action is still below the 50 period moving average, so that means the 50 period is going to be acting as a level of resistance. But if you look to the left of the chart, clearly the 11.2 acted as support and resistance previously. So if we start seeing an aggressive move to the upside right here, I would expect to see some noise around that 11.2. And if that does take place, then we'll remap out this kind of pattern of what's going on. Well, the last chart we'll go over really quick is the 10-year bond. Nothing's going on. We're looking at the weekly time frame. Not a great start for the week, down almost 7% on Monday, but it's still above this trend line that's acting as support. And really, if it starts heading down lower, we're going to be running into that 0.6 area. And on videos quite a while back, we know how supportive 0.6 is. So I would imagine to act as support around this area too if we start seeing a move more to the downside. And then we'll follow it up in weeks to come to see what might take place from there on. Positive divergence in the RSI, positive in the MACD. Overall, this looks like it's basing out. I've been saying I'm long-term kind of bearish with all of this, but it does look like it has the potential to still spike up, and I still am holding on to that in the short term here, unless if something changes on the chart. That's all I have for you on today's market brief. If you guys got comments, questions, concerns, leave them in the comment section below. If you don't already, follow me on Instagram. You can hit me up there on there. I post on my stories intraday. If I see any cool little updates, I'll share them with you there. Sometimes in the YouTube community tab. And then also I have a Twitter at Mike P. Silva. That'll be linked in the description below as well. I'll see you guys later.